Good evening, students.
Good evening, ma'am.
Good evening. Okay, students, today we'll start with one of the function of central bank is what? Controlling of credit. You can see here on the screen, credit control by central bank. Okay, so that topic we'll discuss. Um, so you can see here, credit control by central bank. So why central bank have to control credit? Okay, because credit is created by whom? Commercial banks, yes. So credit is created by commercial bank. So when there will be more money supply in the economy, okay, and when there will be a situation of inflation, okay, so to control the situation, the central bank tries to control credit. So here you can see the central bank possesses a number of instruments for controlling credit money. So basically here you can see there are two types of instruments or techniques with the help of which central bank control credit. One is your quantitative, another one is qualitative. Okay. So here quantitative techniques seek to regulate total quantity of credit while qualitative measures affect the availability of credit. So we will discuss today few quantitative credit control technique. Okay. So here the first one you can see open market operation. Okay. So what is open market operation all about? So this is one of the quantitative that you remember. See in the as your question paper will be totally MCQ. So in the question they may ask open market operation is a technique adopted by central bank. Option A quantitative, option B qualitative, or maybe they will give some name of some other option. So you need to know it is a quantitative, not qualitative, quantitative. So what is it? Open market operations means it implies purchase and sale of securities in the stock market. Okay, so either the central bank will purchase or central bank will sell, okay, the securities in the stock market. Okay, so purchasing and selling securities in the market, securities in the stock market is called open market operations. Fine. So when the central bank appears in the market as a seller of government security, suppose here central bank is selling the securities. Okay, so money will go into the economy, right? Money will go into the economy. People buy such securities by withdrawing money from banks, or the banks themselves invest in such securities instead of granting loan to public. Getting it? So how is it going on? When central bank will, here you can see, when central bank will sell, okay, when central bank will sell government securities, then everybody will try to purchase, okay, the public will try to purchase, as well as you can see here the banks will also try to purchase. So when people, the general people, they will try to purchase those government securities, what they will do? They will withdraw money from the bank. They will withdraw money from the bank. Then they will buy the securities, or the bank themselves will, what they will do? They will what? Buy. Right? They will invest. That means they will buy. Fine? Understood? So that is one point. Then in either case, the powers of creating credit will be restricted. Okay, so that means here we can see the power of creating credit will be restricted. So if bank themselves will invest their money in buying the government securities, so bank will not grant more loan to the public. So that way automatically your, what will happen? Automatically credit will be controlled. Because bank themselves, they are using their fund to buy the government securities instead of what? Giving or granting loans to the public. Getting it? Understood? Okay. So On the other hand, if central bank buys securities, if central bank will buy, okay, if central bank will buy, then what will happen? Money flows out, thus enlarging the case base of member banks. Okay, so if central bank will buy the government securities, central bank का पैसा जाएगा कि नहीं? So that means bank will have availability of cash, right? So there will be money flow, thus enlarging the cash base of member banks. Understood? Understood now how it works? So see, what is open market operation? Open market operation is buying and selling of government securities. Now, central bank, if central bank wants to control credit, what they will do? They will what they will do? Sell. Sell or buy? Sell or buy? They will sell, right? And if like, or we can say vice versa. They will sell if the central bank wants to control credit. If central bank wants to, like, supply more money, then what will happen? Central bank will, yes, buy. So through open market purchase and sale of government bonds, the central bank can decrease and increase the money supply. Okay, so money supply can be increased or decreased with the help of one technique, that is open market operation. Either the central bank will buy or sell. Now if they will buy, what will happen? Now you have understood. And if they will sell, what will happen? You have understood. So simple meaning of open market operation is simple, like buying and selling of government securities by the central bank in the stock market, in the market. Fine? Understood? Okay. So, but at the same time, the effective rate of interest of the government bond gets changed automatically, which the central bank cannot prevent. Suppose the government bond in question bears a rate of interest 10% with a face value of 1,000. This implies a yearly return of 100. If the central bank wants to purchase this government bond in unlimited amount for say 2,000, the effective rate of interest gets changed to 5% automatically, which was no part of the intention of the central bank. Okay, so through open market purchase and sale of government bonds, the central bank, and this you have understood. So this is like one of the example is given about the rate of interest of the government bond. Okay, so if central bank will do buy or sell securities in the open market, the rate of interest will automatically change. Okay, it will automatically change. So that this example is given. So credit expansion depends upon external business environment and borrowers' attitude over which banks have no influence. Fine? So this is one open market operation number one. Now next is variation of reserve ratio. Commercial banks are legally bound to keep a portion of their deposits in the form of cash reserve. Okay, so all the commercial banks in India, okay, as we are talking about India, all the commercial banks, they are compulsorily or legally, they are bound, they have to keep a portion of their deposits in the form of cash reserve with the central bank. Okay, so that is called your, we can say, reserve ratio, cash reserve ratio. So it is the most liquid asset in their hand, and at the same time it is zero earning asset. Okay, so it is zero earning asset. So that is like deposited with the central bank. Naturally, by altering the CRR, the central bank can expand or reduce the funds bank can lend. So if the central bank wants to control credit, either, okay, central bank wants to control credit, like control, or they want to, like, supply, money supply increase or decrease karna hai, then what they will do, either they will increase CRR or they will decrease CRR. Fine? If the central bank wants to control credit, they will increase CRR. Right? Because reserve, they will, if commercial bank will keep more reserves with the central bank, then with the commercial bank, they will left with less deposits. Okay? And with the deposits, they will be unable to provide or grant loan to the general public. Understood? समझ में आया? क्या समझ में आया? CRR रेट बढ़ा देंगे ठीक है, इसका मतलब क्या है, CRR रेट बढ़ा देंगे मतलब क्या है कि जो कमर्शियल बैंक है उन लोग का डिपॉजिट्स का ज़्यादातर पोर्शन सेंट्रल बैंक में चला जाएगा, तो उन लोग के पास तो कम पैसा रह जाएगा टू ग्रांट लोन टू द जनरल पब्लिक. सो दैट वे सेंट्रल बैंक will adopt to this technique, will try this technique to control credit. So that is CRR. Understood? So CRR, the central bank may increase, that means expand, or they may decrease. Okay, if they want to, if the central bank wants to control credit, they will increase the CRR rate. So there exists an inverse relation between the size of cash reserve and the amount of credit given by a bank, assuming a given amount of deposit. Understood? Okay. In underdeveloped money market, this technique is more suitable than open market operation or bank rate policy. Okay, so in the underdeveloped countries, it says that this technique is more suitable than open market as well as bank rate policy. Only these two points are given here. Now, qualitative credit control. Okay, so quantitative, only two points are given here. One is your CRR, another one is open market operation. So now, qualitative credit control, here you can see a central bank also possesses certain techniques by which it can control the direction and distribution of credit purpose wise or area wise. So the purpose of selective control is the rational allocation of scarce bank credit and its economic utilization. So here we'll see some qualitative credit control. One is model suasion. So model suasion is what? Model suasion is like request. The central banks will request the commercial banks, you try to reduce your credit. Okay, you try to control your credit creation kam karo, aisa like the central bank request karenge, that is moral suasion, will try to morally persuade them, right? So that is moral suasion. So the central bank will request the banks to lend more or not to lend in some sectors. Okay, like lend more to some sector, because there are various sectors in the economy, agricultural sector, industrial sector, right? There are various sectors in the industrial, like for businesses we have different sectors. तो ये sector में इतना ज़्यादा मतलब किसी को education is one of the sector, right? ये sector में जो business करना चाहते हैं इन लोगों को दे दो, ये sector में कम दो, rate of interest बढ़ा दो, ठीक है? वैसे the central bank will request them, okay, that they will request banks to lend more or lend less in some sectors, okay? So there is no legal compulsion behind this acceptance. So there is no, this is not legally, this is not compulsory. The central bank can only request them, you do it this way, okay? So generally, if a request is not carried out by the bank, okay, the guardian of the banking system may take such steps as banks are forced to accept. So if they will not accept it, okay, if the request is not accepted or carried out by the banks, then the central bank will take some necessary action, okay? Then next is the central bank is often empowered to issue directives to member bank. So central bank will give them direction, directives will be issued to them. Now such direct orders are in the form of directional control, prohibiting loans of particular type of, giving advice to grant loan to priority sector. So in the directions will be given to them that you do this, you do that, okay? So here central bank will give them direction that you prohibit loans to particular type of industry and grant loan to priority sector. जो इकोनॉमी का प्रायोरिटी सेक्टर है उन लोगों को you give them, you grant loan, और जो प्रायोरिटी सेक्टर नहीं है उन लोगों को लोन ज़्यादा मत दो. Fine. So that is your moral suasion all about. So only one quantitative like qualitative and quantitative. So two quantitative techniques are given here. One is your Open market operation, another one is, yes. So in quantitative, we have one more, that is your bank rate policy. Okay. So we have SLR, that is statutory. Statutory. One is CRR. One is yes. Fine. So now we'll see money market. Okay, so here financial market. Okay, so what is financial market all about? See, under financial market we have money market and capital market, right? So what is financial market? Financial market is the market for borrowers and savers, right? Financial market is the market for borrowers and savers, right? So in the financial market, the savers, they save money and the borrowers, they borrow money, right? So financial market is the middleman between the savers and the borrowers. So financial market is divided into two, money market and capital market. So money market is called as your short-term market and capital market is called as your medium and long-term market, right? So here you can see money market is a short-term credit market which deals with relatively liquid and quickly marketable assets such as short-term government securities, treasury bills, bill of exchange, etc. So what is the other name of money market? Short-term market. Okay, short-term market where the assets can be, okay, the instruments can be converted into cash within a year. ठीक है, एक साल के अंदर instruments को हम लोग we can convert it into cash. So that is your money market instruments, or we can say money market. And some of the instruments of money markets are your treasury bill, bill of exchange, right? Commercial paper, all those. So here you can see some definitions are given. Money market is a collective name given to various firms and institutions that deal with various grades of near money. Okay, instrument which is near to money, which will be, which can be liquid, okay, which can be like converted into cash within a very short period of time. So RBI defines money market as the center for dealing mainly of a short-term character in monetary assets. It meets the short-term requirements of borrowers and provides liquidity of cash to the lenders. Fine. So what are the objectives here? A well-developed money market serves the following objective. The first one, it provides an equilibrium mechanism for ironing out short-term surplus and deficit. Fine. So short-term surplus and deficit, उसको क्या करते हैं? Like they ensures equilibrium. Then provides a focal point for the intervention of the central bank for influencing liquidity in the economy. Then it provides access to user of short-term money to meet their requirements at a reasonable price. So short-term requirements के लिए, like people can invest in money market. Yes. So the characteristics of money market is it is short-term, it is short in nature. Short-term funds are borrowed and lent. There is no fixed place. Transactions are conducted even over the phone. So there is no geographical boundaries. Like from anywhere you can deal or do transactions in money market. So dealing may be conducted with or without the help of brokers. Okay. With the help of brokers also you can buy the instruments, you can invest in money market, and without the help of broker also. The short-term financial assets that are dealt in are close substitutes of money, near money. You can easily convert it into cash. Funds are loaned for a maximum period of 1 year. Okay, so the instruments can be converted into cash within 1 year. Presence of a large number of sub-market. Okay, so there are large number of sub-markets in money market. Okay. So you can see here, this is the structure of Indian money market. Okay. So one is organized, another one is unorganized. Okay. So organized money market means what? Organized money market is, it is controlled and regulated by the authority. But unorganized money market is not controlled and regulated by any authority. Right? So the financial market which is not regulated by the authority, that is your not regulated, that is your unorganized, and regulated, that is your organized. So in Indian money market, okay, we have the participants, or the members are your RBI. Okay, so instruments that are issued by the participants, that is your RBI, the commercial bank, savings bank, non-banking companies, and even the cooperative banks. Okay, and other commercial banks, we have scheduled commercial bank and non-scheduled commercial banks. Okay, so these are two under commercial banks. Then under scheduled commercial bank, we have public sector, and another one is the Indian banks. And under public sector bank, we have SBI and the nationalized bank. SBI, State Bank Group. Okay, State Bank of Mysore. Okay, we have like SBI Group. We have in different states, we have like SBI banks. So, and another one is like other nationalized banks. So these are the participants of, we can say, the structure of Indian money market. And unorganized is like your, we can say, any local, we can say, the money lenders. Okay, suppose XY, Mr. X, he provides loan to the people. He's not under anyone. He's not following anyone's rule. So he may charge any interest, right? That is unorganized. Maybe he will not take anything as security also. You want money 2 lakhs rupees, that person will happily give you 2 lakhs, but you have to give interest, right? So that is unorganized. So in the unorganized sector, that particular sector is not following any rules and regulations. Okay, so you can see here, it is called organized because its activities are systematically coordinated by RBI. Okay, so rules, control, okay, it is regulated, controlled by RBI. And unorganized sector is not controlled and regulated by RBI. The organized modern sector of Indian money market comprises of RBI, the State Bank and its associate banks, the joint stock commercial banks, scheduled as well as non-scheduled, of which 27 scheduled banks have been nationalized, the exchange banks, which mainly finance Indian foreign trade, cooperative bank, and the other special institutions such as your IDBI, SFC, National Bank for Agriculture and Rural Development, that is your NABARD, okay, non-banking financial institutions, Export-Import Bank, Exim Bank, that is, which operate in the money market indirectly through banks. Okay, so participants of Indian money market, organized sector, Indian money market are your RBI, commercial banks, cooperative banks, non-bank financial institutions. Those are the participants. And even there are some non-bank financial institutions such as LIC, that is also one of the participants. GIC is also one of the participants, GIC and its subsidiaries. Then UTI, but only indirectly through banks and not directly. So they are dealing indirectly, okay. Then quasi-government bodies and large companies also market their short-term surplus funds available to the organized market through banks. So with the help of banks, various big companies or quasi-government organizations, they issue various instruments, okay, make available various instruments for the investors. Then cooperative credit institutions occupy the intermediary position between organized and unorganized parts of the Indian money market. These institutions have a three-tier structure. One is at top, there are state cooperative banks. At the local level, there are primary credit societies and upper cooperative societies. So underline all this. Okay. So considering the size, methods of operations and dealing with RBI and commercial banks, only state and central cooperative banks should be included in the organized sector. The cooperative societies at the local level are only loosely linked with it. Okay, so from this you need to remember money market. Money market is a market for short-term instruments. Okay, and the instruments are converted into cash within 1 year. The participants of money market are RBI, SBI and its associate banks, cooperative banks, then non-banking financial institutions, right? So these are some of the participants. Then unorganized, that is not coordinated by the RBI, not regulated and controlled by the RBI. So we can say the indigenous banks and the money lenders. Indigenous banks and the money lenders are your unorganized sector. So the money lenders operate throughout the country, but without any link among themselves. Indigenous banks are somewhat better organized because they enjoy rediscount facilities from the commercial banks. Okay, so here it says that the indigenous banks are somewhat better organized because why? Because they enjoy rediscount facilities from the commercial banks, which in turn have link with RBI, but this type of organization represents only a loose link with RBI. That means loosely controlled by RBI. So indigenous bankers and all these are loosely controlled by RBI. RBI does not like directly control the unorganized sector of money market. So constituents of money market lenders and borrowers are here you can see sub-markets of organized money market. These are the instruments: call money and notice money, commercial bill, treasury bill, commercial paper, certificate of deposit, intrabank participation certificate, collateral loan market. So these are the instruments of Indian money market, or we can say sub-markets of organized money market. See, call money is like what? Call money is one bank is borrowing money from another bank. Okay, one financial institution is borrowing money from another bank for a very shorter period of time, for 1 day, for 2 days, for 3 days, okay, for a rate of interest. So that is your call money all about. So here you can see call money represents the amount borrowed by commercial banks from each other for short periods to meet their cash reserve requirements. So to meet the cash reserve requirements, if one commercial bank is taking loan from another bank, those banks whose cash reserves decline below the statutory requirement, okay, below the statutory requirement, if like the cash reserve ratio is low, okay, to maintain that, okay, they borrow from other banks, from such bank which have surplus cash reserves. Funds are thus borrowed and lent for 1 day. So why it's called as call money, like maybe over a telephone or like by giving email for 1 day, and if it's holiday in between then it may be 2-3 days also, and for a period up to 14 days. So you can see 1 day and up to 14 days notice without any collateral security. So no collateral security is given, and one commercial bank is taking loan from another commercial bank. So the market has thus two segments: call or overnight market and short notice market. Okay, so up to 14 days. So that's why short notice market. The rate at which funds are borrowed and lent in this market is called call money rate. So the rate of interest is called call money rate. The rate is determined by demand and supply. So this is all about your call and notice money market. Okay, next is commercial bill market. Okay, CB, commercial bill. So commercial bill is like your bill of exchange. Okay, so when there is credit buying and selling of goods, okay, so in that case a bill is prepared, right? So that is called your bill of exchange. So commercial bill market is like these are bill of exchange, okay, by the seller, okay, drawn by the seller, that is the drawer, on the buyer, drawee and acceptor for the value of goods sold. Once the bill is accepted by the buyer of goods, that is drawee, it becomes a legal document acknowledging indebtedness. It is a negotiable instrument. So bill of exchange, commercial bill or bill of exchange, it is one of the same thing, right? So it is a negotiable instrument and such bills are drawn generally for 90 days, fine. So this is one. That means if you are buying goods on credit, okay, and in the bill you are writing, you are giving a later date, okay, so on that later date, on the maturity date, the person can withdraw the money or encash that bill. So during the tenure of the bill, if the holder is in need of cash, he can discount it with a commercial bank. Okay, so before 90 days, so after, suppose after 30 days, if you want money, you have urgency, if you want money, you can go to the commercial bank, you can discount it. Okay, suppose the bill is for 50,000, you can discount it. Okay, the bank will will charge some amount and will give you some amount. Suppose bank will charge 1,000, so how much will you get? 49,000. Okay, so that is discounting of the bill. So 1,000 is the profit or the charge taken by the commercial bank. Why? Because they are discounting the bills. So if the person wants the cash before in hand, before the maturity period, so that can be discounted. So the bank will deduct interest called a negotiated discount rate for the period the bill is yet to run. The bank will receive the face value on the due date. So on due date the bank will get 50,000 from the buyer. Yes, from the buyer. Meanwhile, that is from the drawee, right? Meanwhile, if the bank is in need of funds, it can rediscount it in the commercial bill, rediscount market at the market related discount rate, right? And if commercial bank will require money before due date, the commercial bank can rediscount it, okay? So banks arrange their bill portfolio in such a manner that some bills mature every day. These trade bills, that is commercial bills, are considered liquid asset as they can be converted into cash quickly by the discounting. Okay, so that's why it is discounted within 1 year very easily. Okay, with a very short period of time, this can be rediscounted. The money, the bill will become liquid. The bill will become what? Cash. You can convert it into cash. So that's how it is a what? Instruments of money market. Now next one, treasury bill. Okay, so you need to remember here, treasury bill market. Okay, this is one of the sub market of money market, Indian money market, right? So treasury, who issues treasury bill? That can be the question. Treasury bill is issued by Government of India. Okay, so treasury bill is issued by Government of India. So what is the here maturity period? For a period of 91 days. That also you need to remember. 91 days it is issued by Government of India. Yes. So since November 1986, 182 days treasury bills were issued by RBI. Longer maturity treasury bills with varying maturities up to 364 days were introduced in April 1992. These bills were issued as a part of public debt operations of Government of India. They are issued at discount and therefore do not carry interest payment obligation. So treasury bills are issued at discount. Okay, it is not issued at face value. It is issued at discount and on the maturity date, okay, the investor will get the money in face value. Okay, It will be issued at discounted rate. और जो डिस्काउंट रेट का जो आपका जिसमें आपने इन्वेस्ट किया था, जितना आपने पैसा दिया था और जितना आपको पैसा मिलेगा, उसका जो डिफरेंस होगा, दैट इज द प्रॉफिट फॉर यू. फाइन. देन व्हाट इज कमर्शियल पेपर? On the recommendations of Bhagul Working Group, underline that, commercial paper is introduced in the Indian money market in the year 1990, January 1990. The need for the introduction of this instrument has arisen out of the changing industrial scenario. In the environment created by liberalization policies of the government, the industrial sector launched plans of diversification, expansion and modernization. Okay, so when liberalization came into picture, when a new economic policy was introduced, new economic reforms, so that time, the industrial sector, they have they tried to expand their business, diversify their business, they wanted to modernize their business. So this has led to an enhanced demand for funds, and to satisfy the demand, CP is introduced. Okay, so that's why more funds were required, and for that, to satisfy that, commercial paper was introduced. So commercial paper are unsecured promissory notes. Okay, what are those? Those are unsecured promissory notes, okay, issued by corporate entities to raise resources for their short-term needs instead of borrowing from bank. Okay, so these are commercial papers are issued by the reputed organizations, reputed industrial units. They have good name and fame in the market. Okay, because these are unsecured. If they are not reputed, then who will invest in CP? Who will buy commercial paper? Right? So only the reputed organization, they can issue commercial paper, because the objective of issuing commercial paper is what? To raise money, right? To raise fund. The organization, they wants to raise fund. They do not want to borrow from banks. They raise fund. It is a kind of your promissory note, okay, and unsecured. So public has to have some trust in that industrial unit, और वो industrial unit को modernize करना है, ठीक है, expand करना है, diversification करना है, इसलिए fund चाहिए, and they issues commercial paper. So here you can see, it is a certificate evidencing an unsecured corporate debt of short maturity. It represents a promise by the borrowing company to repay loan at a specified date. Fine, clear? Okay, so repaying loan means what? Like whoever are investing or buying commercial paper, the company is promising them. That's why it's a promissory note, promising them that on the specified date we will repay you the loan. Now certificate of deposit. So certificate of deposit is introduced by RBI, that you underline, it is introduced by RBI in the year 1989. So this way the MCQ will be that who issues CD, certificate of deposit, RBI, which year? 1989. The objective is to further widen the range of money market instruments and to give investors further opportunity of deploy their short-term funds. And CDs are deposit receipt issued by banks against deposits kept by individuals, companies, public sector undertakings and other institutions. Non-resident Indians, NRIs, can also subscribe to CDs, but only on a non-patriation basis. Fine? So that is your CD all about. Then next is your interbank term money market. So this is a market in which banks alone, both commercial and cooperative banks, participate. Only banks can participate in this. That's why it is like the name itself suggesting interbank. They borrow and lend funds from each other for a period over 14 days and generally up to 90 days. No collateral security is insisted upon. The rates of interest are market determined. Okay, and deposited receipts are exchanged. As per the Indian Banks Association rules, lenders cannot prematurely call back these loans. Hence, this instrument is not liquid. Now, collateral loan market. It deals in collateral loans. These loans backed by security. So, collateral means what? You know, there is a security involved with the loan facility. So, in this market, commercial banks provide loans against the government securities and bonds. So, this is your instruments of money market all about. Now about defects of Indian money market. So Indian money market में क्या क्या defect है? Okay, so in Indian money market we have discussed that there is a presence of both organized and unorganized sectors. So the important defect to the Indian money market is its division into two sectors. Indian money market में दोनों है, organized भी है और unorganized भी है. इसीलिए क्या है? It defect है. What is the defect? There is little there is no like coordination, cooperation. Okay, we can say there is no coordination and cooperation between the two sectors. In such condition, it is difficult for the RBI, okay, to ensure uniform and effective implementation of its monetary policy in both the sectors. Okay, unorganized is loosely controlled by RBI. Unorganized sector, they design their own rules and regulations, they set their own rate of interest, right? And in the Indian money market, some people, some public, they go to unorganized sector, okay, no security is required, right? Easily they will get loan, right? Easily, like, you know, they are investing their money, or we can say they are taking loan, right? So here there is no coordination and cooperation between these two sectors. So that's why for RBI it becomes difficult to ensure uniform policies for them. Now next one is your predominance of unorganized sector. बहुत सालों से, starting से, सालों से आपका like people go to indigenous bankers only, people go to money lenders only, क्योंकि कोई आपका papers का ज़रूरत नहीं है. You go, you want to take loan, if you want money, you can go to them, you can borrow money, right? So another important defect to the Indian money market is its predominance of unorganized sector. These indigenous bankers, which constitute a large portion of the money market, remain outside the organized sector. Therefore, they seriously restrict the RBI's control over the money market. Then, wasteful competition. Wasteful competition exists not only between the organized and unorganized sector, but also among the members of the two sectors. So there is competition among the members of both the sectors. The relation between various segments of the money market is not cordial. Coordination nahi hai. They are loosely connected with each other. There is no coordination, there is no cooperation. They generally follow separatist tendencies. They basically the unorganized sector, they follow their own rules and regulations. Similarly, competition exists between the Indian commercial banks and foreign banks also. Okay, तो organized sector में भी competition है बोल रहे. Then absence of all Indian money market. So Indian money market has not been organized into a single integrated all Indian market. It is divided into small segments. ठीक है, इंडिया में अलग अलग segment है market का, money market का. जैसे we can see here there is a little contract between the money market in the bigger cities like Mumbai, Chennai, Kolkata, and those in smaller towns. Okay, अलग अलग segment है. It is not like all are into one nation, one money market. Okay, so there is absence of all Indian money market. It is divided in different cities. It is like we have division of money market. Then inadequate banking facility. So Indian money market में क्या है? Inadequate to meet the financial needs of the economy. Although there has been rapid expansion of bank branches. बैंक का branches बहुत जगह में हो गया after the nationalization of banks, yet vast rural areas still exist without banking facility. So as compared to the size and population of the country, the banking institutions are still not enough. ठीक है, रूरल एरिया में अभी तक बैंकिंग फैसिलिटी नहीं गया है, तो इसीलिए अनऑर्गेनाइज सेक्टर जिंदाबाद, राइट. तो जहाँ पे नहीं है, वेयर पीपल वांट्स मनी, सो वेयर दे विल गो टू मनी लेंडर्स फॉर स्मॉल रिक्वायरमेंट ऑफ द मनी, दे विल गो टू द मनी लेंडर्स. ठीक है नहीं, छोटा अमाउंट चाहिए, या इफ दे विल अप्रोच बैंक, then lots of paperwork and lots of things are required, right? Lots of documents are required. So people will, the people who are living in the rural areas, they will go to the unorganized sector, that is your indigenous banks or money lenders. Then Indian money market, there is a shortage of capital. The availability of capital in the money market is insufficient to meet the needs of the industry and trade in our country. Okay, we need to encourage people to invest in Indian money market, right? So treasury bill खरीदना है आपको, commercial paper खरीदना है, you need to invest in that. Then seasonal shortage of funds. The major drawback of the Indian money market is the seasonal stringency of credit and higher interest rates during a part of the year. Okay, year का एक season में maybe rate of interest is more. It's not uniform throughout the year. On the contrary, during the slack season from July to October, the demand for credit and the rate of interest decline sharply. Okay, so here we are talking about like there is a seasonal shortage of the fund in one season, we can say. Then diversity of interest rates. Interest rates अलग-अलग है. जैसे I have talked about like different, it is divided into different segments like Mumbai, Kolkata, Delhi. So here interest rates differ from one city to the another city. So there is a disparity and multiplicity of interest rates in different cities of the country. So variations in the interest rate structure is largely due to the credit immobility because of inadequate, costly and time consuming means of transferring money. Okay, so in different cities, different rate of interest. So that's why it is diversity of interest rates in different cities of the country. Then absence of bill market. So the existence of a well organized bill market is essential for the proper and efficient working of money market. लेकिन इंडिया में क्या है? There is an absence of bill market. Unfortunately, in spite of the serious efforts made by RBI, the bill market in India has not yet been fully developed. So bill market अब तक fully developed ही नहीं हुआ है. So because of that, the short-term bills form a much smaller portion of the banking finance in India as compared to that in the advanced country. Okay, so as compared to the advanced country, हमारे इंडिया में अभी भी मतलब जो short-term bill है, okay, so that form a much smaller proportion. तो Indian money market में participants are, we can say, general public or participants are less still need to be developed. ठीक है, डेवलप नहीं हुआ है, लेकिन अभी कोविड के बाद तो अब आपका कैपिटल मार्केट बहुत थोड़ा अच्छा हुआ है. द कंडीशन ऑफ कैपिटल मार्केट अच्छा हुआ है, लाइक पीपल हैव स्टार्टेड इन्वेस्टिंग इन द सिक्योरिटीज. ओके, पीपल हैव स्टार्टेड बाइंग शेयर्स क्या है, इन्वेस्टमेंट क्या है, पीपल हैव नाउ कम टू नो, क्योंकि बहुत सारा फ्री टाइम मिला, यूट्यूब देखा है कि नहीं, गूगल देखा, तो people have come to know about the share market, the capital market, थोड़ा about money market also, but still people need to know about it. So still in our India, our money market is not developed as compared to the advanced countries. So we will see this in the next class. Okay, that's all for today. Thank you so much.